Yes, amazing. And with that, I'm handing over to Professor Maume. So just please appear on stage. This is more payment oriented, so probably more to the original idea of blockchain. So stay tuned for some insights into this.
Yeah, just microphones on. Yeah, it is. Okay, thanks. Yeah, thanks a lot for having me here again. I had the great pleasure to speak here last year, and I have to say, it is still the most amazing stage that I know in Munich, at least. Yeah, so really glad to be here again. This is the regulation track, and I'm a professor of law. So this is not necessarily alien territory for me, yeah, but these talks are always a little difficult to structure just to accommodate all the different levels of legal knowledge and technical knowledge and so on and so on. So if you hear one or two things that you've heard before, yeah, it's probably necessary. So why this talk? I'm talking about, not too difficult to understand, about stablecoins. And over the last, let's say, 1.5 years, you all know the term MiCAR, the MiCAR Markets and Crypto Assets Regulation. I've had the impression that the coverage or the perception of the MiCAR framework, in particular for stablecoins, is extremely biased, it's extremely negative. To a certain extent, I can understand why that is, but I see it a little bit as my task today to give maybe a little more, not refined, but maybe a little more nuanced approach to these things, because I personally am of the opinion that MiCAR, in respect to stablecoins, is actually something that is written in an absolutely horrible way, so in terms of legal technicalities, but the concepts behind it are, I think, actually quite sound, and I think they could work. And therefore, I want to shed a little more light on some of the policy decisions and the mechanisms behind it. What I talked about quite a lot last year was this. And this means we all know him, and you probably all know this date, or at least that this date happened, because it is actually the date when Meta or Facebook announced that they wanted to launch a so-called global stablecoin. A global stablecoin, and it was not just Meta and Facebook. There were other payment providers on board, credit card, PayPal, and so on and so on. So it was a huge conglomerate of firms. And now something amazing happened. On the very same day, the French Minister of Finance, Bruno Le Maire, gave an interview on the radio saying, this needs to be regulated and we need to be ahead of this, etc., etc. And if you know the European Union, then you know European Union is complex, it's sluggish, etc., etc. But if the French Minister of Finance says something, then at least something will happen, at least in the background. So that was actually something quite noteworthy. And I keep this very brief because I talked about this quite extensively last year. Things happened quite quickly. I mean, think about 2019. We were just at the end of the ICO bubble, let's call it like that. There was no European framework on crypto assets. There were some new rules on AML, anti-money laundering, etc., but this was mostly unknown territory. And the European Union managed, in terms of lawmaking speed, to do something quite interesting, because they were fast. It took in total 5 years for the rules to stablecoins to apply, and 5 years sounds like a lot. But the whole political process, the drafting process, and given that it was a new area of law, something that has before that not been regulated, nowhere, this is actually relatively fast. And as you probably all know, this is not news to you, the rules on stablecoins have applied from 30th of June onwards, and the rest of MiCAR will apply basically at the end of the year. So it is actually a very, very fast piece of lawmaking. The introduction was, this is more a payment or payment system oriented presentation that I want to give. Yes. And first, we just need to think about where we're coming from. When we talk about money, what the law actually has in mind is coins and bills and nothing else. People are always, or in particular my students, are actually quite surprised when I tell them that money in the legal sense is this and nothing else. no credit card, no bank account, nothing. This is money and nothing else. And all other things are, let's say, money of a different tier or subcategory or whatsoever, but it's not real money. But we all know that there is this thing called the banking system, and we all know, we all have some 1, 2, 3 or whatsoever bank accounts. This has become normal. Yeah, so our cash-based system has mostly been replaced over the last 50, 60 years by the banking system as we know it, with these horribly complex bank transactions, SEPA system, etc., etc. We are, and we have been able, for years now, to pay with cards, be it debit cards, credit cards, or whatsoever cards. So life has become a little more, let's say, convenient in terms of payment. But behind the scenes, and this is what maybe some of you know, but some of you might not, this is still extremely old school, because what happens if you pay something, let's say through a direct debit or an online transaction, or maybe even through credit card, what happens is that what you see, and I'm talking about the customer and the business, as the payment goes around the corner through the established banking system. We do not see that, yeah? But basically, if we have, or if I have some money in my bank account and I want to pay you some money, then what I'm basically telling my bank is, hey bank, tell that other bank that they tell the customer, so whom I'm sending the money to, that he has now more money in his bank account. This is obviously complex. This is obviously relatively slow, but it's absolutely well established. And as soon as something is very, very well established, it's extremely difficult to replace it. Now, what's the problem about this? The problem is primarily it's slow, it's expensive. It's not so expensive if you just want to transfer money from A to B here in Germany, but I've lived for 4 years in Australia. That was a pain in the, let's say, neck. Yeah? That was a pain in the neck. It was eye-watering. Every online transaction from Germany to Australia and the other way around, 25 euros. Now think about it if you're an international company. If you're an international company and you have a lot of international banking transactions, it's horrible, it's expensive. And it takes time, 3, 4, 5 days are actually normal. But what is, apart from these elements, and this is of course very, very important for businesses, because TUM School of Management, we just had colleagues of mine, Amy, here on stage, we look at these things of course from a business, from an entrepreneurial perspective. But the second element, and this is probably more where people at the Blockchain Conference are coming from, this is merely an internal booking system of a bank that is attached to the booking system of another bank. And it is difficult, if not to say impossible, to attach these to the real nice gimmicks that we have in the Web3 world. Interaction with smart contracts, interaction with the Internet of Things, it is simply not on the table. Yeah, it is simply not on the table. And if we actually want to realize the full potential of Internet of Things, etc., then we need somehow find a solution to get from this, what we have right now, into, let's say, more technology-based and not so traditional solution. A second example, why this is important. There is the German law on electronic securities, EWPG, das Gesetz über elektronische Wertpapiere. That came into force some 3-4 years ago, and it was at the beginning not overly popular. It still isn't, but there's a reason for it. It allows basically to issue bonds at the stock market, or not at the stock market, that's exactly the point, to issue bonds that are not printed on paper, because believe it or not, until a few years ago, bonds and stocks had to be printed by German law on paper. Yeah? Really paper. Really, really old school, like 150 years ago. So it was now possible to issue these bonds based on a blockchain. And these were a lot of little transactions. The first companies tried to get their foot into the door. We had small issuances, small transactions. And then it was in 2023, so 1.5 years ago, big news. Siemens issued a first bigger bond, about 60 million euros, which is not a lot, but in comparison to the tiny blockchain transactions that had been there before, it was big. at least it was something conceivable. And the whole, for example, on LinkedIn, everybody went like, oh, this is amazing, this is a breakthrough, etc., etc. Yeah, but the problem was, if you go through it, if you read the text that came with it, Siemens has used blah, 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 blah. And in the end, it said, payments were made using classical methods as the digital euro was not yet available at the time of the transaction. The transaction was able to be completed within 2 days. 2 days. On the one hand, we have blockchain, atomic transactions, etc., etc. And the payment for the transaction has to go through the bloody banking system, taking 2 days. So the de facto situation is that the old school banking system is slowing down basically the application or adaptation of blockchain solutions in practice. And that is, of course, a huge, huge, huge issue. I hear colleagues of mine who basically said, on the payment side, there's basically nothing moving yet, but at least there will be MiCAR soon. Now, what are actually the steps to get around this? I mean, in the very first step, we all know that. And on this stage, I do not have to explain to anyone what blockchain is and how blockchain works. Ideally, we have peer-to-peer transactions from two participants in the blockchain network. Easy. In practice, it's of course not as easy. We will probably still have intermediaries, etc., etc. But as we also all know, Bitcoin has so far not been widely implemented as a payment solution. And originally, I mean, think of the title of the white paper, Satoshi Nakamoto. It was designed as a payment system, but it has not been, let's say, hugely adapted by big firms. And there's a reason for it. I mean, there's a lot of criticism about Bitcoin, whether it's viable or not. Let's say regulators don't like it because we do not have a central entity. Greens don't like it because of the energy consumption, etc., etc. How old school economists don't like it because there's no intrinsic value, which is bullshit, but still. But the main problem from a business perspective is volatility. Volatility, I mean, this is just the chart over the last years, and it doesn't sound like much, but if there is a risk that your method of payment fluctuates from one day to the next by 5 or even 10%, and we all know for these other coins the volatility is even much higher, then this is not suited for, let's say, application in a big company. Think about airlines, for example. What are the biggest costs for airlines? Well, fuel. How is fuel being traded? In dollars. What is volatile? The dollar. What is volatile? The fuel price. Both. Yeah? So airlines, for example, have to have a very, very intricate system of derivatives, hedging, etc., so that they protect their business from these fluctuations. And if you use Bitcoin as a method of payment on a larger scale, it would be exactly the same. So volatility is basically a killer for big application in business. We also have all heard about the digital euro. We can keep this close. Let's talk about it again in 10, 15 years. Yeah? There is a draft for a regulation on the European level to establish the digital euro. If you feel really bored, read through it. It looks more like a white paper than a real regulation. There are so many things that are not clear when you read it. Okay, what does that mean? What are the rules? It's just not clear. It is my view that it will take at least 10 to 15 years for us to have something like a digital euro. Whether we need it or not, different topic. I think we do, but open to debate. But it's just not on the table. It is not on the table, and that creates a huge opportunity. Because from a business perspective, if we have a method of payment that is on an international level accepted and that offers companies ways to reduce their costs of operation. So for example, in terms of payments, speed, reliability, interaction with modern software solutions and so on, companies will use it. They will use it. It's just, it's the nature of things. And I've had, for example, once an argument with a member of the European Parliament who then said, "Oh, why do we need a digital euro? Yeah, I can pay with my credit card," and just, yeah. The thing is, other countries are working or let's say, other countries, and also companies in other countries are working on these payment solutions. And from a strategic perspective, Europe needs some kind of independent payment solution. Because if some international conflict, and we are seeing international conflicts right now, erupts, and the wide part of our economy are relying on international payment providers, then what we've seen at the start of the Ukrainian war is just a fraction of what might happen to our economy. So this is a question of strategic independence. And it's quite simple. Companies will take the opportunity because they have to. So, but this creates an opportunity because we have a gap and we have a demand. And who can close this gap? Of course. And now we are talking about, essentially after about 10 to 15 minutes of pretext, about stablecoins. So the idea is that we create coins that are stable, that are not as volatile, that are more dependable. But the first thing in the debate is, what is actually stability? Because most people do not think about it. They hear stable coins, but what does stable mean? It could mean that the coin is overall stable, so it's not volatile at all. It always provides the same, let's say, value, which makes it extremely, or would make it extremely alluring or tempting for companies because it's predictable. And that would actually be a new means of payment. That would be a new method. This would be like a new currency, because other currencies that we have right now, they are not by definition stable. Even stable currencies are volatile to a certain extent. And so the second meaning of stability that can be used in this context is stability in relation to another asset. And this other asset is then very often a currency. So for example, that tether is basically mimicking the US dollar. And these already are two completely different meanings with two completely different implications. Because one, on the left side, we have like a new payment method or a new currency, whereas on the right, we would have a currency that is basically mirrored by a stablecoin. And that's something completely different in terms of policy making. Second thing, how do we achieve a stability? Most of you know that as well. Either I accrue, buy, whatsoever, get my hands on as many assets of these or underlying assets that I'm trying to imitate. So quite simple, if I have a euro stablecoin, then I should have many, many, many euro in my wallet, or wallet in terms of in my safe, so that the coin remains stable, so that all people in the market assume, okay, this Philipp Maume coin actually is worth exactly €1. And why is that the case? Because he has the equivalent of euro, for example, in his bank account. The second one, the actually more fascinating one, but unfortunately not overly successful one, are the algorithmic stablecoins that try to create a certain stability or a certain market price by influencing demand and supply. So for example, by issuing more coins, basically, so to widen the supply and lower the price. Actually, these are mostly then the stablecoins that didn't work in the past, or that failed, or that were hacked, etc., etc. So these are actually the problematic ones. Not problematic ones in terms of regulation. What MiCAR clearly has in mind is this one. So the idea under MiCAR is we want to create stability through having underlying assets. And that's actually the pivotal point of the whole regulation. Now, if you look at the law, and there is no talk about law without looking at the law, MiCAR stablecoins have the beautiful names asset reference tokens. In German, it's even better, Vermögenswerte-referenzierte Token. German is a beautiful language. And e-money tokens. And if you look at these definitions and you try to read them, classical example of you do not know what it means unless you know what it means. I mean, seriously, look at it. A type of crypto asset that is not an electronic e-money token and that purports to maintain a stable value by referencing another value or right or a combination thereof, including one or more official currencies. What does that mean? No one knows. What that typically will mean in practice is tokens that aim for overall stability, that have a basket of underlying assets that are trying, or that with the aim to keep the stable coin really stable in terms of nominal value. And then we have the e-money tokens that are actually based on a currency and only one currency. So e-money tokens are then like tokens based on the dollar or tokens based on the euro or whatsoever. My screen just vanished, which is, oh, there again. So which means MiCAR has two legal categories for tokens or for stable coins, and they are actually, in practice at least, these two categories of stability that I've talked about at the beginning. So, but what does it mean now if we are the issuer of a stable coin, so we want to put a stable coin on the market? What does MiCAR mean for us? And this is where the pain starts. So now we're looking a little bit at the law, the underlying law. For MiCAR, the MiCAR regime to apply is that a stablecoin is offered in the European Union. Well, we buy stablecoins or any kinds of crypto assets through the internet, and unless there is some very, very effective geo-blocking or geographical blocking, you can basically access sellers all around the globe. It basically means if a stablecoin is the internet. So which means the MiCAR stablecoin rules apply around the globe on paper. And that is a big thing. That is a very big thing. Now, if you're doing that, you have to issue a white paper. You all know what a white paper is. That is something that can be kept under control. Now, this is something that can be planned. It's costly, but it's something you can deal with. Second one, if you offer a stablecoin in the European Union, you have to comply with ongoing requirements in terms of internal organization, in terms of AML, et cetera, that are comparable to those to a financial service provider. And that is something relatively new. In classical securities laws, if I issue shares, then I issue the shares, I have a prospectus, but that's it. Unless I'm going to a regulated trading facility. Here, we have ongoing duties. If you want to issue stablecoins, you basically have to become a financial service provider in terms of regulation. Or one step further, I'm really sorry for this interference here. If you are issuing an e-money token, so a token based on the euro, for example, this is limited to licensed banks and e-money institutions. So basically, you can only issue e-money tokens if you're a bank. And this is something where the industry is actually complaining because this is something that favors banks and excludes small companies. And I fully understand if people in the industry say that's not fair, and it isn't, but it's a political decision. You have to meet high capital requirements when you set up when you start issuing stablecoins, and you have to have a certain reserve of assets. And that's the second pain point. Because every holder of MiCAR stablecoins has to have the right of redemption. Right of redemption means I can go to the issuer and say, I want to give back my token, I want my money. And MiCAR basically says that an issuer has to be able to meet these claims at any time. Which means de facto, if you have stablecoins of a value of 1 billion euro around, you have to have assets of 1 million euro. And which means the money that you get for selling the stablecoins has to go into a reserve. And this is something that, for example, the US stablecoins do not really like, to put it mildly. If you get that bigger, if your market capitalization goes up, et cetera, you become significant. You become a significant e-money token or asset reference token, then the regulation gets even stricter. What happens now if you do not comply with these rules? Well, your offer can be banned, and based on national laws, it can even be a criminal offense if you do not comply with these rules. Very often people then just say, not, yeah, criminal offense. Yeah, maybe ask the founder of Telegram about 2 weeks ago. Yeah? So this is not just something that's happening on paper. Yeah? This is something that the member states actually taking quite seriously. Yeah? Of course, Telegram had nothing to do with MiCAR, of course not, in this situation. However, the threat of criminal liability is something that is very, very effective. Now, why does the European Union do that? The first reason is, of course, stability. What we do not want, and I say we, none of us wants that, is to have a huge stable coin that then collapses. Yeah? Terra Luna, that would be bad. Because if the stablecoin collapses, then this has implications for the real economy. And we do not want that. Really, we do not want that. And this is a political decision. For this reason of stability, the European Union has cranked up all these additional rules. And this is putting small offerers on or small issuers at a disadvantage. It is a political decision. Second one, accountability. That has to do with this criminal offense I just mentioned. But two things that are very often overlooked. The first one is what is labeled innovation through certainty. From a business perspective, and talk to founders about that, they say we do not need the most favorable rules, we need reliable rules. We need to know what the rules are, we need to know what the playing field is. There's a reason why the crypto economy in the US is not really, let's say, getting up speed, because they always have these constant fights with the SEC. I talked about that last year. Yeah? So this is huge uncertainty. So the EU's idea is we create a playing field with dependable rules that are maybe not the greatest rules, okay, give you that, but it's certainty. And as soon as you have certainty, you can build. Yeah? And the fourth one, and this is something that probably most of you people did not know, is something we call in management a first mover advantage. There is a PhD thesis out there that calls it the Brussels effect. There is this saying, the US innovates, China duplicates or something like that, and the European Union regulates. This is painstakingly simplifying, but it's still not wrong. Because what the European Union is doing is exporting its regulation. We've seen that with the GDPR. We will see that with the AI Act. And the so-called Brussels effect means just by Europe very often being the first mover in terms of regulation, this very often becomes a template or even a standard. And this is the big opportunity that now exists in basically on the global stage. We'll be at the end very soon. What most of you probably don't know is that for stablecoin regulation, there are now bipartisan proposals for regulation in the US Senate. Something like that will happen in the US as well, because it is simply speaking necessary. And the European Union has been faster to that extent. Now, what are the strategic implications? Camp 1 says basically, we will not have stablecoins in Europe. And Camp 2 says, well, we do not have stablecoins in Europe anyway, because the market share of euro referencing stablecoins is less than 1% on a global stage. But this might actually change, because I'm speeding up now a little bit. The Tether, and you all know Tether as the world market leader, they said not so long ago, we have actually given up on Europe. They know what they're doing. They didn't say they deserve it, but they basically did. That's what they were saying. We will probably not apply for a MiCAR license. And on the 21st of June, some of you might have received that one, Binance sent an email out to their customers in Europe, essentially saying you will not be able to trade, in particular buy, non-MiCAR regulated stablecoins anymore, such as Tether. This actually suggests that we will not have a global stablecoin in Europe available. However, the second biggest on the market basically said, but we are doing it. We see that as a business opportunity, because here we can grow. Here we can grow basically and get rid of our biggest competitor. So things are moving, and they're moving right now. And just the very last comment, if you take a closer look at the European framework, it makes sense. For example, e-money tokens are counted as something like money because they are electronic money. So the European legislation treats e-money tokens like money. I'm simplifying a little bit. Or in terms of DLT pilots, the big new stock exchanges that hopefully finally realize the full potential of DLT securities trading, you can pay there with EU stablecoins. So these are two small examples, but if you look at the whole framework, the European Union has inflated or put into place a lot of these little screws and bolts to make basically the MiCAR stablecoins something that can be used in other areas compliant with EU regulation. So what I'm trying to say is it's a coherent system that's being built here. It's a coherent system. And from a legal perspective and also from a business perspective, that's a big, big thing. That's a real big thing. So it's not just about, ooh, stablecoins, MiCAR regulation, bad, bad, bad. Yes, we will lose certain companies. It will become more expensive issuing stablecoins in Europe. But the European Commission in particular has tried to make sure that we have a path that we can move down now. And from my legal perspective, and you're absolutely happy to hold a different experience here, different opinion here, this might even work. And we're seeing this right now because it started at the 30th of June. We are seeing this right now. We are seeing this transition right now. And I'm absolutely sure if I give the same talk 1.5 years later, we would have a very, very different opinion of stablecoins under MiCAR. I'm actually very excited. Thank you.
So we're out of time, so no questions, but maybe I have one. How can people reach you if they happen to have a question?
There is this thing called the internet. Yeah.
Never heard about
and
it.
There is
it's
only
new
one,
in Germany.
There is only one Philipp Maume on this planet. I keep researching that on a regular basis.
That's
and
cool.
I'll be around here until 4:30 anyway, because there will be a fireside chat later on. So I'm hanging out.
So people can just push into you and ask a question.
Basically.
Awesome,
Be polite
thanks.
about it, but thank you.
Then big round of applause and your beer mug.
Ja! Boah, ich hätte Maus.